Sign up today.
The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. It doesn't matter whether you're in Poughkeepsie or in the South Seas. We love to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Okay, so we're back to euphoria kind of reigning supreme. I just took my Dow 3000 party hat off. Now it looks like I'm going to have to put it back on, but we're right at that Dow 30,000 level. Almost no volume. Let me put it this way. Significantly lighter volume than the last 3 or 4 days as we've moved higher. Today, we're starting off with about 2.3 billion shares lighter than yesterday at this time, so fairly light. Again, everybody I'd say probably 80-85% of the people I know have zero belief that the market can go down before New Year's. And that, of course, always leaves everybody being Cinderella at the party, all thinking that they're all going to be out the door at 11:59. So you don't know about that. Of course, today is the last day of fund buying. So generally you get at least some sell-off following that. And generally on today, probably would figure that 5 or 10 points down on the S&P wouldn't be a big surprise following the markup for fund buying, which has been rather muted the last 2 days. One of the bigger things out there today that caught my eye was the House has passed a bill, and it is probably going to get signed this weekend, maybe Monday next week, if you believe what you read from the rags that cover Washington, D.C. But it would force Chinese companies listed in the U.S. to either adhere to a strict American accounting standards or delist and go elsewhere. And, of course, one of the things that I railed against for, several years off and on, see if I can find it here, was that. Okay. Yeah, I've got him here. I just wanted to make sure I had him here. But here's a couple of clips. I forget the guy's first name. I always call him Herman Munster. His last name is Munster. He's always telling people what to buy and sell on CNBC. But frankly, I thought he should have been in jail for what he was doing by buying Chinese companies back a few years ago. Here's a few clips.
Are their revenues $350 million, or are they $3.7 billion? Which is it? Are they making $122 million, or are they losing $2.1 million? This can't be the same company. You must have pulled the wrong filings. But
that was a story on one of the Chinese stocks where literally there was a factor of 10 difference between what they reported in China and what they reported here in the United States.
Has that crossed your mind?
Absolutely.
Okay.
That has. It crossed my mind with all my Chinese companies, and more with the Chinese companies than with the U.S. companies. And I think when you're dealing with this, there's a 5% chance I'm dead wrong, and this could be nuclear. But I don't think that that's the case.
But shouldn't the stock trade at a discount if there's a 5% chance that it's a zero? I mean, shouldn't the SEC, there should be a regulator. There's one regulator for these companies. It's the SEC. And the SEC has no ability to call the country of China.
And, of course, everybody just said that I was all wet. Nothing would ever happen.
You know, this is probably a first in a couple of regards. It's probably the first company to pre-announce earnings to the downside after already announcing their earnings date. and doing so 43 days after the quarter has ended. So you bring up a good point. Like, if it's a fraud, do they not even have enough control over their fake numbers to know what they were going to be when the quarter ended? I mean, I don't have a good answer for you then. But it's also probably the first internet company, depending on, mobile buyers, that has pre-announced earnings because of bad weather.
Right.
So the question is, if we look at Chinese linked stocks, what do you think they're going to do going forward? Again, a lot of people have kind of written this off to some extent. And so far, the market is acting like nothing's going to happen. JD.com is up 2%. Cena's flat. WB's up 2%. And, of course, Baidu and some others. Baidu's up $1. Kind of acting like nothing's going to happen when it seems like the news flow is very highly suggestive of just the other happening. And so, normally you'd see some kind of thing, but in these kind of markets where everybody is absolutely euphoric and there's zero downside to having cooked books in China, I don't know what's going to happen. Anyway, the Chinese are all up in arms, saying that they're going to move all their companies to Hong Kong and let them change on the Hong Kong exchange. But there is kind of an interesting point to what China has, and that is they're saying, well, if auditors can actually look at their books, then maybe they'll rat out to the CIA all the deep, dark secrets of these companies and let the Americans compete a little bit better than they have. But in reality, all that stuff is eventually public and not too far away from when the SEC auditors come looking for them. So, China stocks, generally a lot of this stuff doesn't matter till it matters. But I think a lot of people are whistling past the graveyard one day on these Chinese stocks. Question about China. Is this an excellent case for being made for Chinese blockchain? Well, the answer would be yes if you couldn't crack it. But since we know that the guy that ran the Silk Road, I brought this up, 2-3 weeks ago, maybe 4 weeks ago with Tom O'Brien on my Tech Insider segment. How did they get the password for his $1 billion worth of Bitcoin? He didn't give it to them. They cracked it. So if you can crack it, does it really matter? And that would be my biggest thing, is that there's a lot of belief that it's uncrackable. Well, we know it's not. Kind of like the FBI always running around like Henny Penny saying that they can't crack an iPhone. And every time you turn around, well, we just bought some software from an Israeli company and we were able to get into the phone. But every time, they make a big stink about it, like they can't get in, it just always makes me think that they're kind of trying to make sure that people think that they can't get in when they actually keep in. Anyway, what is a company worth on the U.S. stock exchange? What's one worth in China? Good question. We shall see.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And normally we have Tim on the line, but I haven't heard anything back from my engineer, whether or not he's on the line or not. But maybe he's just answering the phone. Mr. Engineer, let me know when Tim Ord does call in. What else do we have going in here? We'll do a little bit of history while we're waiting for him.
And it's all just a little bit of history repeating.
On this day in 2001, inventor Dean Kamen unveils the Segway self-balancing battery-powered vehicle on the TV show Good Morning America. The Segway uses computers and motors in its base to keep it upright while the user is riding it. Users shift their weight to control the Segway. Why not considered a commercial success? The Segway has become a familiar icon of personal transportation. Never really went too far. In 2010, Dean Kamen sold the company and everything to a billionaire in the UK. Within 10 months, the billionaire had driven one of the Segways off the top of a 100-foot cliff, killing himself. By 2015, it had been sold to some folks in China, and just this summer, all production has stopped. We're going to go to Tim Ord, already on the line. How you doing today, Tim?
Good. How you doing, Dave? So glad to be on again. So
glad to be somewhere.
Got some interesting charts here. So you got time? We can take a look at them.
Go right ahead. We got chart one up.
All right, chart one up is actually the SPYs. It only goes back about eyeballing about a month and a half. And what's important about this chart on November 9th, which is that kind of a black bar there, and I got arrow pointing to it. It says 172M.
Yep.
Well, that's 172 million shares traded that day. And that's an exhaustion, what I call them exhaustion move or a buying climax. When volume jumps at least 30% previously from the days before, normally you got a chance that the market is an exhaustion move to the upside. And that's what happened here. If you look down on the volume chart, which is right below the candlestick chart there, volume just like a little finger sticking out. So that was a huge jump in volume. And when you get that much energy in such a short period of time, usually it just stalls the market. It takes all the energy out for a while. And if you notice, the market kind of just flipped sideways, did kind of trend up, but basically just kind of flipped sideways. And Tuesday of this week, we tested, or actually we closed above that high. But if you look at the volume was, eyeballing, it looks like about half. And normally for a valid breakout to the upside on a buying climax, you want volume to be around equal or higher. And obviously that hasn't happened here. Volume's about half. So that could imply a false breakout to the upside. If you look at yesterday's trading, we had a minor update, didn't really do a whole lot. Now today's volume, this is when I mailed you this chart, it was probably a good hour ago. The volume is not going to be anywhere near Tuesday's volume. So this is another test of a previous high on lighter volume again today. So what does show upside momentum here is really weakening. And if you go down to the bottom chart there, it's the VIX. And both VIX and the S&P, today's not over yet, but when this chart was printed, the VIX was up along with the S&Ps. And when both are up, that's a bearish divergence. Normally, VIX goes down when the S&P goes up, but when they both go up, that's a bearish divergence. So what I'm saying here is that November 9th high of the buying climax doesn't have a valid breakout to the upside, and we don't really have any energy pushing above the previous highs. In other words, no sign of strength above the previous highs, suggesting that the market's not going to keep going higher here. And it's kind of hard to see. I didn't really label it because the chart was getting kind of messy anyhow. But the pattern that could be forming here is three drives to the top pattern that started back around the November 9th low. And if that turns out to be the case, then we go back down to the November 9th low, which is around 350. Not a huge move down, but that's what it looks like to me is what's forming here. If we can't take out the previous high with volume, we'll try to take out the buying climax low on volume, so that's probably where we're heading. And I do have marked on this pattern here a triangle pattern, those dark red lines that are in the middle of the chart there. That appears to be a triangle pattern, and all that suggests is we just go back down and test the upper boundaries of that trend line again of the triangle pattern. And most likely, I think we'll find support. So this week, we may hold up again tomorrow. I don't know. But a lot of these signals come on Fridays to make you sweat over the weekend. And I'm betting right now, there's not a bet, but I'm assuming next week could be a down week. And next week, if you notice, is the week before option expiration week. And an old guy named Wallenchuk named a Word Wally Wednesday the week before, the Wednesday before option expiration week. You get all these weird moves going into expiration week. So I'm thinking next week could be a down week, setting up for expiration week, which normally is an up week. So in a nutshell here, probably down next week. Not sure what tomorrow brings, but I'm betting tomorrow's down, or I don't know what tomorrow's going to bring, but next week could be a down week. So, you got any questions on the chart?
Not that much. I went through a ton of stocks making 52-week highs yesterday on the show, and I'd say 9 out of 10 didn't have any volume as they broke new highs or had very light volume. So, maybe 50, 60, 70 stocks. Went through them as quick as I could on the air. But most of them, like I said, there were a couple of them out there that did well, but almost all of them were showing really horrible volume yesterday. And at least what I have, I use the CBOE volume on the day, but we're, normally you get maybe 10 to 15 billion shares a day on the total volume. We're about 2.5 billion shares lighter than we were yesterday at the same time. So yeah, we were looking at that, I think, at the very beginning of the show, or what I've been looking at most of the day. So, and then options, fairly bearish tone all the way into the 18th, which is expiration, which is what you were talking about. So I kind of saw the last couple of days here as either an opportunity to get out or get short. But we shall see. Like you said, Friday, you can get a lot of machinations. But the question is whether or not everybody wants to go in sitting on some fairly big wins into the weekend. We'll be back in a minute with Tim, and we'll look. We got chart 2 ready to come up. Lots more. If you want, give me a call. We'll let you talk to Tim. 877-927-6648.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we've got Tim Ord on the line. He's got The Secret Science of Price and Volume, which you can find on Amazon. I've heard that Amazon is a big deal. You can also check him out at theord-oracle.com. He's had a newsletter for about 30-plus years, and I learned a great deal from him. Okay, I'm looking at chart 2, Tim.
All right, what the middle chart there is the NYSE stocks above the 150-day moving average. And right now, when I wrote or printed this chart out, 86.14 stocks were above the 150-day moving average. And this chart goes back to like 2000, so it shows a long history, what it does. And the blue shaded area I have on that chart shows when the stocks are above the 150-day average. And if you notice, none of them came at significant highs. And right now, again, we're like 86%. And so you can have short-term corrections, but not usually at intermediate-term highs. Trouble can occur when stocks above the 150-day average fail to get above 70%. And the red vertical lines show when that happens, like in 2007, late 2007, 2008. Stocks above the 150-day average never even got above 70%. And it happened again in 2015 and again in 2018. So there can be minor corrections here, but if the market does correct, this chart would suggest that you want to buy that pullback. So what this chart says is the intermediate-term trend looks healthy, and it's not really set up for a deep decline here. So my scenario on this last chart, we looked at that daily chart. I think we may get down to 350. And we get a lot of panic in the ticks and trend. That probably would be a good buy area. And this chart here suggests if there's a pullback, you should buy it also. So maybe a minor pullback next week, maybe the week after. But in general, the trend should move higher intermediate term. So that's what I'm saying. Even on the bottom chart there is the NYSE stocks above their 50-day moving average. And it sits at 85% as of yesterday. So there's really no weakness in the market to speak of to suggest anything major high forming near any current levels. The market usually weakens before it makes a top. And right now, there's really no weakness in the market. If we do pull back, we go back up, and stocks above the 150-day moving average gets down below 70% or something, then you're starting to see weakness. Then that would be something to worry about. But
quick
at
question.
least this, next month here it looks fine. So, and probably for several months of the new year also.
Quick question. When you're talking, Are you saying TREND or TRIN?
TRND. Oh, trend. Oh, okay.
Trend or trend? TRIN.
Yeah, I use the trend as a bottom form on panic. If you got no panic, if you ever looked at the 2008 decline or most of these declines you had over the last bunch of years, if the market's going down, you got a trend around 1 or less. That's really a death sign because the market's going to keep going. The market will keep going until the market panics. And once you start seeing panic, it's the time to look for the next buy signal. And the trend, when it gets up around, depends what year it is, lately anything around 1.3 over the last couple of years has been a buy signal. But in the past, sometimes some years it took up to 2 on the trend to get panic. So it kind of varies year to year, but it's a slow process. It doesn't like change 1 year from 2 the next year to 1.3. It's a gradual process, so you can kind of follow it fairly easy. But panic always comes at bottoms. If you don't got panic, you don't have a bottom. And I use 2 indicators I use that have been over the years pretty reliable are the ticks and trend. So when the trend gets up around 1.3, preferably higher, and the ticks get down below on a current time frame around minus 300, usually you're looking at a bottom, within a day or two. So what I'm saying on this next pullback, if there is one, if there's no trend reading above, 1.3 or around 1.3 or higher, there's not going to be a bottom. So that's what I look for, kind of confirmation. So when everybody's going to the exit door, and everybody's on the sell side, that's when that trend, TRIN, becomes high, and that's when you want to go the opposite direction. So that's why I'm saying, and if we do get the pullback and we do get a high trend along with some downtick readings and everybody's kind of panicking, that would be a great setup for a buy signal, especially around the 350 area, because that's where support is.
Last we talked, we were kind of thinking that maybe there was a chance that gold would pull back. What's your thoughts with about 2 minutes left to go here? I'm thinking
we actually, the way I'm looking at it right now, that could change. But I'm thinking the bottom's in on a short-term or actually intermediate term. I think the market's turning the corner. So I think this chop we had, I don't have the chart right in front of me, but the chop we've had down since I think was at the August high is pretty much ended, and now we start up. There's several reasons why. We did get panic in that last decline from the November high. The DSI, it's kind of and also the the options. Oh, there's panic in the options, and another indicator called DSI, I think is from Russell. Both got into an area where intermediate term lows have formed, so we did get into panic area on gold. So I'm thinking is it in process to turn the corner, or actually has turned the corner? And I'm thinking new highs are coming. I think next rise up will be an impulse wave, and new highs is coming. So it's to me, I'm a little bit early. I did get long here about a month ago, I guess it was, and I held through that position because I think these impulse waves are kind of hard to catch. But once you get near them, you want to stay long, because when they go, they kind of just don't turn back. So I think that gap up we had, I think, is a breakaway gap. And those breakaway gaps, a lot of them don't get filled. So I'm not looking for that gap to get filled here. So bullish, probably for at least 3 months, probably longer. Okay. Well, I want to thank Tim for being on. We'll see you in a couple of weeks. Tim Ord of the ord-oracle.com. That's O-R-D. If you like the conversation, want the charts, just email me at path@tfn.com, and I'll be glad to send them to you. Tim, thanks again for stopping by, and we'll see you in a couple of weeks, which sets us up for options expiration week, right? Yep, that'd be option expiration week. We'll talk then. Okay, thanks. All right, bye.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're going to go through as many of these 52-week highs as we talked yesterday with the super light volume on a lot of these. American Eagle Outfitters saw a lot of earlier in the day these retail stocks breaking out to new highs, but no juice. 13 million shares on the 24th of November for American Eagle Outfitters AEO. Into that with about 3.2 million shares. So about 25% of the volume. AMAT, a light volume doji just up at the highs, and most of that was given back. Ambarilla actually looked like one of the stronger stocks out here. Volume is probably not what you like, but it still looks like one of the stronger semis out there. Now we've got some stocks. Some of these are pennies, but pretty ugly charts on Golden Minerals Company, AUMN. That's got dark cloud cover back for the last 2 days. BHP, a possible 3-gap play. You want to watch this one very closely into tomorrow if this thing starts moving back lower. You did have some very good volume yesterday. So far today, not that much. CASA, which is Case of Systems. Now, this one looks actually fairly good. It is breaking previous highs, and you have some volume. You might want to check that one out if you're feeling froggy. Cliffs Naturals making a little bit of dark cloud cover, not enough to the downside here, but certainly not holding the 52-week high in CLF. You got a little bit more volume. It's lighter in the morning. COHU, another stock that blew out with volume today with 1.1 million shares compared to 725,000 shares yesterday. So a lot of these got the shorts against the ropes. Ceragon Networks back up to 52-week high, same volume as the previous high. It's not much going there. Thinking about shovel-ready jobs, circa, 2010? Don't know, but Simtex, the cement company, having a good day, making a new high. A couple days ago, you had 36 million shares. You got about 11 million shares today. Dogs that are howling out here, and one that you would worry about if it does gap down tomorrow is Deutsche Bank. It gapped up with very light volume today. Disney, just a little doji, making a new high, but not holding it. Fairly light volume on 4.5 million shares compared to 10.6 million shares yesterday. EWT, which is the Taiwan ETF, gapped higher here on fairly, I would say, okay volume. But this thing's gapped up, I don't know, for the last 2 weeks. You got to wonder when those gaps are probably going to close. Another company in that materials stock with a small gap higher is Freeport-McMoRan. This on a little bit lighter volume. FIT, How big is a Laurel reversal pattern? To LORL. Laurel space. Well, you're probably going to fill the gap there at 20 on L'Oreal, LORL. Other retail stocks that look interesting. You spiked high on Five Below. This is kind of like a dollar store, except it's $5. Gave all of it back today on fairly benign volume. Hudbay Minerals, another one up here that was up to 707. Gave a great deal of that back today. Not a lot of juice so far. IEMG, which is the core emerging markets, shared a little bit of a gap higher, but no volume whatsoever. Kirkland, actually the winner chicken dinner, blew up with volume today. Got to 1998, holding most of that nice move. Liberty Media trying to break previous highs. Volumes just a tad light, but not a real sign of strength out here today, and certainly lighter volume in the last few days. Lam Research making another 52-day high, but half the volume of yesterday's. Macy's is another one that I thought was interesting in that it's going past its 133 million share June 9th high with 23 million shares today, but it is holding $11.60, albeit on lighter volume. Michael's companies, of course, there are craft stores in strip malls around the country, blowing out the September 2nd $11.70 high that had 9 million shares with 26 million shares, but not holding that much of it. Those make me think that maybe they're running shorts out. Morgan Stanley, almost a nothing, little tick higher to make another 52-day high. Middle or Steel, MT symbol on this one, coming back to actually get in a gap that goes back to May 3rd of 2019. Not much in the way of volume for that one today, though. Okay, TA, we talked about this one last couple of days. Respiked the $251 October 14th high that had 1.3 million shares with 3.3 million shares, but unable to hold that high, reversed back out of it. Pacific Biosciences started to break previous highs going back to early first couple of weeks of November. Had 6.6 million shares a couple of days ago, up on about a little less than 3 million right now. PRTS, which is U.S. Auto Part Network, trying to break a 52-week high. Doesn't look like it's going to hold the previous spike of 1644, but you do have volume in that. As we talked yesterday, the Qs up on extremely light volume. 303.06 is the September 2nd high that had almost 51 million shares. You're up today with 13.4 million shares, which should tell you a great deal. Okay. You got two gaps higher in Rio Tinto. The first gap yesterday had a lot of volume of 4.2 million shares. Today, you're doing about half that with the same gap. Starbucks making a new 52-week high at 101 today. Volume's okay. Nothing to write home about. Spectra Energy with a big doji out here going into the highs of 11. What is that? November 6th of 20. Yeah, November 6th. So you had 1.7 million shares. You had 4.3 million shares, but could not hold the high. SPOT, Spotify. Of course, this, I don't know if you can make a great deal about this. This is the weirdest company in the world for how many shares are available and where they're at, but making a new 52-week high. Seagate Technology, man, this dog actually breaking, probably going to get close to the volume of 6150 on January 24th. And holding it. This thing was massively shorted, so it may go for a couple of days. We'll be back right after this.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we're wrapping up the show here today, let's take a quick look at Apple. Been watching it throughout the day, trying to get into the 125.39 high of October 13th. That had 262 million shares. You're up, but not holding it today on 52 million shares. Like I said, just about everything out here has very extensive light volume. I don't see anything that anybody really waiting for tomorrow morning in the way of economic news. Vail, again, you got a little bit of retest of 2 days ago high that had 52 million shares. You got 25 million shares today. So keep a close eye on these things. They're continuing to move. Take a quick look at some of the other big movers out here. Microsoft is going sideways. Just another doji out here for it today. And let's see what else we have. Take a quick look at Amazon. Same thing, kind of just going a little bit sideways out here. Not much in the way of volume, though. So that's kind of, well, do we have one more we want to look at here? See if I've got anything out here. I mean, I've got so many stocks out here that are super extended that you got to think that it's at least time to ring the register, if not go short the market. But we shall see. Oh, one last question here coming in. Willem Petroleum up 4% today. Whiting Petroleum. Not much to write home about on that. We talk about AMAT. Can't remember what we did. Yeah, a little doji out here today. Again, you've got to really watch for these things to gap down, because generally in this kind of market, that's exactly what's going to happen. You got everybody euphoric, you gap down, everybody thinks it's going to go retest high. Maybe you just go sideways down for a couple of weeks until everybody thinks maybe that is the last high for a while. So when you can, not when you have to, we shall see you here tomorrow. Same bat channel, same bat time.